growth is resilient, remains, and we see our forecast show an increase of growth in 2025 compared with 2024. Slightly lower than what we expected 6 months ago, so still, and we see some impact of the slowdown in Europe, advanced Europe, Germany in particular, but also the rest of Europe. So we see some impact a bit on the Central and Eastern Europe, but still growth is very resilient, and the very good news is also inflation going down, which gives room to monetary policy to adjust.
What are the links between growth and the region? In terms of that slowdown, what is the loop that you're witnessing?
So a lot of, manufacturing capacities are in Central Eastern Europe, working, very integrated with Germany. So if Germany is slowing down and manufacturing in Germany is slowing down, which is what we are seeing, then it has an impact on manufacturing demand on our countries like Slovakia, Poland, Czech Republic, Hungary, and so forth. But still there, because they have strong price competitiveness advantage and so forth, there is a bit of effect, but it's still very, very limited.
A lot of the German speakers have been discussing the situation with, say, look, it's an issue around energy, it's because of the war in Ukraine, whereas externally, other Europeans are saying, look, they need to do something, they need to step away from the debt brake, it is too constrictive here. Do you agree? Does Germany need to park the debt brake?
No, I think on the one hand it's clear that energy prices have had a big impact, and the impact of the war in Ukraine and its impact on energy makes a huge difference in Europe. When you see the energy price in Europe compared with the US is 3 times higher, so I think that has a big weight on the situation in Europe. What is clear is that Europe needs long-term investment for the green transition, but also for digitalization. So that's where the debate about the debt brake is. And I'm not going to interfere with the German debate, but I think that there is a need, and it was the decision taken by Karlsruhe last year had a big impact on what Germany can do and cannot do. I think there is a need for investment that needs to be addressed.
We're talking about a pivotal time here around green and digital transition. How do the countries that we're talking about seek to benefit from this era? Are they perched well for the future?
I think that, for them, first of all, green transition, and that's true for Europe, but also beyond Europe in a number of countries' operation, is also a way to ensure energy security. Because we've seen with fossil fuel, with gas, that dependencies can put you at a very vulnerable position if something changes. So that's why renewable is a guarantee for energy security. And I think that it's because the activity it generates and so forth, it can also have positive effect on demand, on the development of new technologies and so forth. So that's why, because it's the future, I think that investment in this area are very much needed, and it's an opportunity for all countries to grow in the future.
What are the biggest risks that you see from here? There's been a lot mentioned, trade wars, geopolitical issues, the energy situation, inflation, whether it returns, even though there's some hope. We're now seeing a lot of disinflation. What are the risks in your view?
I think the geopolitical situation is, probably the largest risk. We see, the situation in Ukraine, the war in Ukraine and its impact on the region, and how things, depending on how things develop, this is a big risk. But also the situation in the Middle East. It's not only, very worrying on the human plan and with all the civilian being killed and so forth, but also the impact if situation deteriorate, the impact on oil prices and so forth could have a big impact on the world economy. Trade tension is also a big, and then the fragmentation of trade. Trade has been in the past a very big source of growth. WTO showed figures saying 7% of the growth between 1995 and 2010, I think, is related to trade development. So fragmentation may be, will have an impact on growth dynamics. And you have some structural challenges which are there also. People, aging population and so forth. This has a big impact on the public finance in a number of countries. Limited margin of maneuver post-COVID. A number of countries have increased the debt level, and this is a big theme from the IMF. This limits the margin of maneuver for the future. So I see all this as important risk. Inflation, I think news is positive on inflation, but of course you have some sticky point on services inflation, core inflation in services remaining quite high. So need to remain vigilant, but still I think the evolution of the situation is very significant.
The big cloud of uncertainty still over this meeting is the US election. Nobody can predict the outcome at this point. What are the implications for growth, for inflation, if it's another Trump presidency?
I mean, it's difficult. It will depend on the policies implemented. So it's difficult to foresee, and it will be, because you have a campaign, but then you will see what will be implemented and what will be the policies implemented. But if you have, big increase in taxes or in the custom taxes and protection measures to protect the U.S. market and so forth, this could have a big impact on European capacity to export and so forth. So that economic implications could be very large, but also geopolitical, depending on the position. How the president would position on Ukraine and so forth. But I think nobody can really predict what will, first of all, the outcome of the election, and then what policies will be implemented.
Let me ask you about climate change, because we are setting up for COP29 in Baku in Azerbaijan. It's meant to be the finance COP, and it's hoped that rich nations will help work out how to bankroll some of the developing nations. What do you see on this front? What's the impact of climate change and the risks of lack of investment at this point?
We see, what I found amazing is that we really see the impact on the real economy of climate change now. When we see the countries in which we work, for example, Mediterranean countries, South Mediterranean countries like Egypt, Morocco, they suffer from drought, and this has an impact on their growth level and so forth. Other countries suffer from floods. So, we really see the physical, real impact of the climate change. It's not anymore a theoretical, long-term issue. It's an issue that we need to address now. And we also see the cost of the financial system. When you look at all the debates around insurance capabilities, the cost of insurance, the non-insurability of some risk, this is becoming a big concrete challenge. On the positive side, what we see is also the very steep decrease of renewable prices and the increase in development of renewable. And we see that in a very concrete manner. We work in a lot of countries which are very coal dependent and used to be very, coal focused. They see now the benefits of developing renewable capacities for energy security, but also because of the cost of renewable energy. This implies a lot of investment, and that's where international support is needed, because it's a huge investment effort to develop the infrastructure. Renewable can bring private investors, but you need to have the grid, the electricity network, being able to absorb this renewable capacity. So this is why, MDBs, private sector investment, governments have a big role to play to provide adequate financial support.